Hello, retail traders. This is a sneaky snake trading strategy, and we study stocks on chart patterns, volume, and the news, being in the now, or at least I do. And I want to show you how I evaluate a stock, a entity. So there's always consistent with what I like to look for, and I first start off by looking at the chart. Today someone asked me to evaluate a LABU, and that's the chart we're going to look at. I first go straight to the chart, and within seconds I know if it's a bull or if it's a bearish chart. Well, I can see a couple chart patterns. So as I go through these stocks and as I study, what I'm looking for is the chart itself. I want to look at the news. I want to read the news about the stock, and I also want to check to see if it has consistent volume. And in that chart, I want to see if I can evaluate any kind of patterns. If I can see any kind of patterns, or if it's a bearish or bullish chart. So within seconds, I can look at a chart and identify patterns. I can identify if it's bullish or if it's bearish. There's three patterns in this chart. One would be an inverted or a head and shoulders. That's right here. This is a head and shoulders. So I've already looked at the chart and I've evaluated it, and just by putting any lines on here, I've seen two patterns and three. I see a head and shoulders, I see a Darvis box, I see another head, and I see a cup and handle. All in 1 year time frame. So head and shoulders, Darvis box, another head and shoulders, and then a cup and handle right here. So it's consistent with chart patterns. This is a swing trade. This is an ETF. I look at the name and I know it's an ETF, so I know it probably doesn't move as well as other stocks do with volatility. I also look at the volume. It's consistent, kind of weakened here in the last 5 or 6 months this year. Got a little bit brave there at the beginning of last year, and it's kind of slowed down and squeezing. The stock squeezes as the volume drops. This volume consistency right here is dropping, and the stock squeezed to the upside. So that's a bullish sign. That's called a squeeze. We can draw a trend line right here, and you can see the downtrend in the volume, and you can see the uptrend. It's called divergence. That's a positive indicator to take a trade. So that's another sign of positivity. I'll go back and I'll look at the 3-year chart. Oh wow, that's way oversold on the 3-year. That pops right in my head. And here's another head and shoulders right here with a shoulder line right there. And then it went ahead and sold off. See, head and shoulders is a sign of a sell-off. You got a wedge right here. You got a wedge right here. Pattern. I'm looking for patterns. So that's real bearish. We'll go back to the yearly. Let me go back to the yearly. I'll magnify this up a little bit. And here we had a trade. We had a trade. This is my sneaky snake trading strategy. This is on the daily candles. So if I would have spotted this here trend, I would have took this trade. I'll show you how. Just by looking at the daily, I could have recognized that pattern. So there's your snake. There's your breakout, there's your pullback, and there's your boom to the 200 SMA. This is all part of my sneaky snake trading strategy. It's called snake, breakout, pullback, boom, straight to the 200. So that would have been a successful trade from this bottom down here. Now on the bottom down here, we have what you call a inverted head and shoulders. So I'll go back to this pattern, and I look for the inverted head and shoulders, the inverse head and shoulders right here. That's a bullish flag. So I draw a trend line on that shoulder. They don't have to be consistent. And there's your head. So once it broke out of the snake, it came back and touched that shoulder line outside of the trend. And that would have been a good spot to take that trade. Then you would have had the snake break out, pull back, boom, all the way to the 200 and successfully got out of the trade with a pretty net profit of $2 almost, $1.75. But that would have been, you'd have had to wait some time. But if you know how the trade works, snake, break out, pull back, you would have kept in that trade because it was consistent with the resistance of this ascending triangle that's right here. So you've got the snake, ascending triangle breakout with the boom, pull back to the 200 SMA. Snake, breakout with an ascending triangle, pull back to that old resistance off that triangle up to the 200. So that would have been a trade to take right there off this here pattern. Now you've got also a cup and handle. Cup and handle right here. There's your cup, your handle, and your breakout to the 200. So you got your snake, breakout, pull back, which is a cup and handle to the 200. To the cup, there's your handle back to the old resistance that was on the ascending triangle. So I'm looking for patterns. Now I'm going to bring this time frame down. I've looked at the weekly, which told me it was very bearish, very oversold. I looked at the yearly, which told me we were in a Darvis box all year around, or actually almost a wedge. Let me get a drink here. Almost a wedge. This is what you call wedge. So you got a triple top on the wedge, and we broke out of that, off that 200 SMA right there. So that's another example that maybe we're starting to be bullish in this trade. Okay, that's a triple top break to the upside above the 200 SMA, telling me that we're bullish in the trade. So I want to take it now to a 20-day. When you evaluate a stock, you can evaluate it 100 times, and there's many ways of looking at it. So I look at the 20-day next, a 20-day 1 hour time frame, and this is where I come into learning how to swing trade and learning how to find supports or how to find a resistance in that 20-day time frame. Right now, on a 20-day time frame, we have what? Anybody check that out? We have what you call a head and shoulders. There's your head, and there's your two shoulder lines. And it found resistance on that shoulder. So this previous high is a resistance level. Say you got in at the snake down here at the bottom, and you wanted to run it up to all the way up to a double top, triple top up here, to that shoulder line on this head and shoulders. I look at it again and I say, okay, I know this stock doesn't have any news. I know it does have a level 2 and it don't work very much, but I do like the time and sales. So I have all three of them up at this level when I'm looking at the 20-day 1 hour time frame. This chart alone is what I call my RSI chart. I trade with different kinds of charts. I've got what you call TTM that I trade with. But for this purpose, we're going to just go ahead and go with the regular one. Some people don't understand that TTM trend. I like it pretty much. So what we have here is a triple top resistance off of Head and Shoulders. And that means we found resistance and we're going to pull back a little bit. Now I've got the 200 SMA. As I evaluate every time frame, the moving averages will change with that time frame. So, the 200 on the 1 day, 1 year on the daily is not the same as the time frame on the 1 hour. On the 1 hour, I use the 200 SMA as a pivot point. So a pivot point is a place in the chart where it's got to make a decision if the stock wants to become bullish or bearish. It's an equilibrium to that channel. So, for example, what we have right here is a Head and Shoulders. There's the head, there's the two shoulder lines right there, and it decided to go ahead and break down to what turned out to be a symmetrical flag off of a snake. So if I was looking at LABU or any other entity right now, and I saw this snake coming hitting the 200 SMA, I'd be getting ready to start to evaluate it, being patient and watching it create a pattern. So we've got the snake right here, and we're going to draw that up as a real fast, hard sell-off, which catches my eye. I would have probably took this trade and scalped it if it would have gave me enough money that day. Just off the fact that we hit the 200 on this harsh sell-off. But it ended up making a symmetrical flag. With a triple bottom. So I'm always looking for patterns. Patterns and being in the now and knowing what trend the market's in. I'm going to extend this blowhorn pattern. This is a megaphone blowhorn pattern. It's called a megaphone. You want to take that trade off that third dip and be consistent. That's called a triple bottom. And if you'd have caught that at the triple bottom, you would have had your snake pattern breakout pretty clear, pretty easy to see, and you'd have took that for a 3-day run and got out of that trade to a double top. So that's called a blowhorn pattern. Megaphone. Once you got out of it at the 200, you'd want to find another idea to get into this trade. So you'd take and draw a trend line at the bottom of that third candle, of that last bottom. Once you got up here at the double top, you said, okay, Jim, I'm going to wait 3 days, or I'm going to wait until we come back and hit that double bottom down here and take that trade, or at least evaluate it at that time. And during that third day, we had a big hard sell-off. So I'd have been watching this real close. On the hour time frame, we had 3 black crows. There's another pattern. See, a pattern, I mean, patterns are everything. I want to show you something else here. I'm constantly studying these little candlestick patterns on the 1 minute to get me into trades. Or you could study them on the daily, it doesn't matter. But you definitely have a bullish and a bearish side to each trade. And if, for example, they've got these 3 black crows as a sign of an indicator for an upside. They've got the 3 white soldiers. That's technically a bullish pattern to me, but I always am cautious, wait for the pullback and then take it up on the continuation run to the upside. 3 white soldiers. You've got the dojis that you've got to watch once it breaks out of that snake that can get you to the upside. For example, right here, you got a hammer. You have a long leg doji. You have a doji right here to the upside. You have a doji right here to the upside. You have a doji right here on the top of the candle that's a downside. You have an inverted hammer, downside. You have 3 white soldiers, pull back, and then eventually I think they come back up. So yeah, be consistent with them little candlesticks. Study and learn how to study them. So we got a double bottom down here, and we're going to magnify this up a little bit. That double bottom, boom! Double bottom, boom. Snake breakout, pull back to the double bottom. Now this double bottom, I want you to see this. This candle here is higher than the body of that candle. Now this candle would have came down and maybe hit a double bottom. It could still probably ran up, but I don't think it would have been as beautiful as this run, because I always preach snake breakout, higher low, boom. So I would have took that trade off that double bottom. Now that's just on the hour time frame for a swing trade. I would have recognized the crows. I would have been in the trade, but I would say you have all the time in the world. Wait for it to pull back to the double bottom and then take the snake out. So that's a 20-minute. Got to look for the patterns. Look for the triple bottoms. Go back to that pattern thing and study these patterns from a double top to a head and shoulders to a rising wedge to a double bottom to an inverse head and shoulders to a falling wedge, bullish rectangular. We've got bullish pennant, rising wedge, bearish rectangle, Darvas box, pennant flag, ascending triangle, descending, and symmetrical. These 3 here are the ones that pay real close attention to. Then the blowhorn pattern's not on here. These are all wedges. See, those are wedges. None of them consist of a blowhorn. Blowhorn goes out like this, kind of like that. So evaluate them. Use the 20-day 1 hour chart. Use that 200 as an equilibrium. Again, I use moving averages also as support and resistance levels when I'm in here. Consistent. Now, if you want to jot down the averages that I use, I'll give them to you right now. We've got the 200 SMA. We've got the 65 EMA. We've got the 51 EMA. We've got the 50 SMA. We've got the 21 SMA, which I'm thinking about turning into an EMA. We've got the 9 EMA. And I've just added the 300 SMA. And I'm started using the 200 EMA. But I don't have them two on this chart here. I also study the volume. I want to make sure that volume is consistent before I take any kind of trade. And then I go to the daily, 1 minute. Now, every time frame is a different kind of trade. I can swing I can find supports. I can swing the daily. I can find supports and pivot points and resistance levels on the daily. Also, I can find them on the 20-day 1 hour. using it as a swing or maybe a scalp. And then I go to the 1 minute daily, and I use this time frame to scalp and to day trade. I got a special patent on what I call the beach trade every morning. I come in and I try to find the bottom of a trade by looking at the searching of the candles and the consistency of what I'm seeing, if it's bullish or if it's bearish. For example, in this trade here, these are all very bullish candles to me because the wicks are consistently on the bottom, not counting this one. So I came in here and I would talk about this breakout maybe. I didn't trade this, but here you go. You got the snake, you got the breakout, you got the pullback, and you got the boom to the double top. And I would have definitely got out of that trade. Snake, breakout, pullback, boom. Now, even on the SPY or the SPX, when I just take a trade like this, I come in and I find the bottom and I run it up to a double top and get out within 3 minutes. These three soldiers, that could be a $60, $30, $50, $40, $50 scalp on an SPX. And if I got 10 of them, first thing in the morning, I've made $300 to $500 within 3 minutes. And there's people in the room that can see it, tell you that happens every single day. Plus, you can watch me do it live on YouTube every morning when I do that beach trade and I get out of it and talk. Like Friday, or it was Thursday, I called one out. It was the SPX, and let's pull it up. This was Friday's trade. Okay. I don't know if this was, I think it was Thursday. Let me see here. Go to my time frames. I think I got a bigger. I'll go to 1 minute. 5 day, 1 minute. Come on now. What's going on here? Huh. Oh, well, it goes in 5 days. That makes a difference. Yeah, I got chewed out in this here trade. Called it out first thing in the morning on a double bottom in the room. Triple bottom in the room. And I was talking about it, and I said, oh, here we go, let's get it. The beach trade. So we pulled back to this here double bottom, and I called it out with that hammer, and I got out up here at the double top, up here at the red line, and made good money on it. Find out the rest of the day, we could have had us probably a very immaculate trade on this in here. I mean, this thing just bounced. Once I got out of the trade at the double pop, it just boom. And I really got a licking chewed out on that one. So the next day I come in here and I called out the other one. We had this snake that turned into I thought was a symmetrical head and shoulders right here. Then ended up being a triple bottom. So I called this breakout. We had the snake into a flag, breakout, pull back, boom. Nailed that trade too. I mean, these 50 to what, $2.50. That was a 300% gain on this one yesterday or Friday. And I called the pullback to the 200 SMA. So you don't need a lot of. This is the 1 minute, right? This is the 1 minute. Now, a lot of traders will bash a 1 minute trader. They don't take the time to learn that they can make double, triple the money by trading a 1 minute chart than what they would by trading 10 minute, an hour chart and missing all these beautiful trades. And then getting stuck in a trade because it knifes on them. Here you're consistent. We had the snake into a wedge, breakout, pull back, boom. And I could have stayed in this trade all day long by reading that patterns on that 1 minute time frame. Yeah, I've been chewed out many times because I trade with a 1 minute. But I probably make more money than they do. Because I'm trading, they're stuck in a trade all day long. I'm trading the thing 2 or 3 times in that period and making 3 times as much. So you got in this trade and they were in it and they didn't sell it. They got stuck and they're down, they're beat up. They don't know when to get back into the trade to cost average down or nothing, but you can if you know how to read patterns. On a 1 minute, you can find very, very good spots to get back in and add on to that cost average down. It's very consistent. But everybody trades different. I don't want to tell anybody how to trade because whatever works for you is the best. Same as right here. Now I called this trade out. We had the snake break out, pull back to a double bottom, boom, and that was my exit idea. That was on the top of this channel. See, we had a channel here, and I just followed that all the way up through and then got out at the top of that channel. I made 55 to 80 cents on this trade right here in less than 2 minutes. I was out of the trade because I hit that double top. But when you're playing a lotto and you buy 20 contracts at 55 cents and sell them at 80, you made a damn good profit of 25 cents. You made $500 in 2 minutes. It came back down. It came back down, and I got back in it again. So I got back down almost at the original price that I got in it at 55 and ended up selling it for $2.50. So I scalped this trade, made $500. It dipped down to a triple bottom, and I got back in it and made another $1,500. All within this little period right here. Snake, breakout, pullback, boom. 3 black crows. Took that trade off the 3 black crows. That's pattern here. Let me see if I can find it. Where are you? Where are you tonight? Why did you leave me here all alone? 3 black crows with a spinning top. Boom. And you got your 3 white soldiers with a spinning top pullback. Each one of these will represent a support level. A lot of times when you have 3 white soldiers and a spinning top, it could pull back to that first soldier and then go ahead and retrace to the upside. So I'm looking for consistent, I'm looking for patterns, and there's your 3 black crows. Boom! To that second crow, which had a resistance. Get out of that trade. Same thing right here. Pulled back to the double bottom. I'm still trading the same stock. Get out of the trade and make another 500. Pull back again because then it hit that pivot point inside of that channel, and then come in it again and run it all the way up to the top of that channel. Get out of it. Fuck. There you are. You're set up again. Where'd that trend line come from? Where'd that trend line come from? It come from this previous double bottom. So I extended that trend line all the way back up there and got out of it again at resistance. What was support now becomes resistance. And here we got another head and shoulders. So we've created a shoulder line of resistance. It came all the way back down again and found its support again on this double bottom here on that V. So always keep looking at them patterns, and I guarantee you'll become a lot better trader. Snake, breakout, pullback, boom is my strategy. Snake, breakout, pullback to a double bottom, boom. To the 200 SMA, that's exactly how it works. You couldn't ask it for any better. So the indicator was a 3 black crows, tweezer bottom, scalp it, come back down, double bottom, run it up, break resistance, to the 200 SMA on 1 minute time frame. And then do the same damn thing right here. Pulls back to the snake, breakout, pull back, boom. So you've got snake, breakout, double bottom, back up in here. So you could be doing that all day long. Let's get back to LABU. I got carried away with those trades because I really liked what I did there on Friday and Thursday. We didn't lose money. We still traded it, but if we would have held it for 5 more minutes, we would have made another $300 a contract. Or it was a good number. Okay, so LABU. That's the monthly. We're at resistance. So I see consistency of resistance right in here. And then I feel a solid support down here at 613. Actually, I could probably lower it just a little bit. But this 613 is a very important number. I'm going to pull it up on the yearly and show you what or the weekly. Or is it the yearly? This 613 area was the bottom part of this here Darvis box where we were consistent for almost 4 months straight of support. And then it became a resistance off this cup and handle right here. So I would wait. If it doesn't break out of this here trend line at 727, which I pulled back, and that was the top part or the middle part of this here Darvis box right in here, and that's the top part of it right up in here. I'm going to draw a resistance line above it. I don't think anybody would have probably spotted the Darvis box there. And that's going to become another resistance level. This 4-month channel. You see, that 4-month channel created a cup and handle with a double top break. See, once it failed it created a cup and handle. Me, I would have probably took this trade down here because it's the snake. I know I would have. Snake, breakout, pull back, boom to that 200. So looking at this chart in general, there's another trend line that you got to look at, and that's these tops. Okay? So if you follow that trend line, we'll make it blue so it's easier to see. That also tells me that we're now bullish in the trade because we're up above the triple top breakout. So support level would be definitely on that top of that line, which is consistent with this double bottom right here. You got to keep reading into it. I don't know if you saw that. We're at resistance. So I know that that trend line was a triple top break. So I want to use that triple top as a support level. And I got to go back in history to look for a consistency where I think a solid support would be, and it would be on the bodies of these two candles right there, which has an equilibrium of hitting almost every candle all the way across, with another body right there up above that up above this here moving average of the 51. So I'm pretty sure that that can hold this area. When it comes back down and hits the top of that channel, of that triple top, that's going to be a strong support. Now this yellow line here is a 65 EMA. And I've just added that to my charting last year. And I really love it. And it runs up against the 51 EMA, which makes it a solid support. Then you got the 50 SMA right below it. So anything in here would be a strong buy, and I'm going to set an alert. This is a Darvis box. This is a inverse head and shoulders. So the old shoulder line now becomes a solid support. So I'm going to set an alert right above that support level. And I'm going to put it up, and I'm going to wait Monday. And I'm going to see if it comes back and hits that. Also going to be watching LABU, see if it breaks that resistance line, and that old resistance line will now become a solid support. So I'm bullish in the trade, but I identified a head and shoulders here, inverse head and shoulders, and I think it would be a real nice trade if this thing pulled back and hit that 550 area, 650, and then take it and run it up and find resistance at 7.25 and maybe get out of the trade. Also want to see, does it have a triple top? No. It has a bunch of wicks, and like I've said before, I don't give a crap about them wicks right now. I want to look at the bodies. The body shows me a double top right here. That body of that candle and the body of that candle. These wicks are inconsistent. None of them are equal. None of them. These two bodies are. They line up just perfectly. So I'm drawing a trend line right there, and I'm going to put a different color on it, red. So I know when I take this trade down here at 650, I'm not going to wait for it to hit the 727. I'm going to get out at the 718, and everybody else is going to get stuck in the trade because I'm consistent with the bodies of these candles, and I know the next body will be a triple top on that body, and I'll get out then. I don't know where the triple top will be on these wicks. Now, if it does start to break out, we have another inverted head and shoulders here on the daily time frame. This is the shoulder line of this head. So if we do break out of the 727, which was this old head and shoulders, we could bounce back up here and hit that shoulder line and take an exit idea at 799. If it busts this neckline at 727. So you got snake, breakout, pullback, boom to the 200. That was your trade. Now you got to play respectfully off of that. You missed your good opportunity here. So we got to create another snake, or we got to find another pattern. Right now, we got a bearish pattern. Why is it bearish? Well, I'll show you. This could be bearish or could be bullish. We're going to draw a trend line right here. And then we're going to draw another one. Right there. Extend it to the right. So that's a bearish flag. This thing can easily pull back down here again to the back to the third time and find support off this double bottom. See what I'm saying? See what I'm saying? You got your trend here. You extend it all the way down. And you got the wick that touched that there. So that would have been probably a good little scalp up to the triple top up here and got out of that trade. Or she's going to come back down, find support off this double bottom. You want to try to read into the future here. And that would be a double bottom strong buy right there. If it did come back down, or someone said an alert, I want to be ready just in case. And if it pops up on my screen come Wednesday, Thursday, or Friday, I'll know that this is a double bottom, and I'll type it in the room. I'll type it in the room, and I'll type it on the chart. Should have typed it on the alert. Let's do that. Set this alert again. And write in double bottom. I'm always constantly setting alerts. Damn it, I did it wrong again. I was going to put the below. So go back in here again. Hit below, double bottom. That's the pattern that I'm looking for the strong buy. Or it'd be a double bottom right here. Comes down and just stops right here. So that's where my third support will be. Now, being in the now, let's say we got the CPI coming out, or CCI, or the CPI, or the PPI, or whatever they are. They're coming out next week. I think that that's going to cause the market to have a little bit of consolidation. And I think that LABU could pull back to that consolidation area and be a very strong buy at 529. You got to be in the now, so you got to kind of predict what's going to happen, what kind of feeling you have. How do you feel? Do you feel like, oh shit, is everybody freaking out? One thing that I've learned about trading, and I'm going to show you, that's made me that's helped out my success, and I've argued with traders about it. I just got, no, I'm not an emotional, but someone reads it different than me, and everybody trades different. Everybody looks at things differently. So I've got this time frame. I call it the map. I was back up in here when everybody was very excited, 6-8 weeks ago, that we were going to break out and everything was booming. And I said, no, ain't going to happen. We've got the bill we got to worry about. You know, we're going to have a little bit of bearishness off all the rhetoric for the next 4 or 5 weeks, because all they're going to do is talk about the bill, the fucking bill, the freaking bill, you know. That's all I heard on CNBC. And during that period, we had a little pullback, not a real good run. And then all of a sudden the bill got signed, and we've had nothing but a beautiful, beautiful run into that signing of that bill. And we're up here back in relief and optimism in the market again. So within 8 weeks, 9 weeks, I've nailed this up to hope. And now we hit the 52-week high on the SPY. So I'm thinking, well, we need to kind of consolidate for the next level of breakout. And I'm calling last week another green week, and then this coming week with the numbers coming out, I'm going to call it a consolidated week, and then we're going to have a breakout back up here to greed and buy, and then the cycle's going to start all over again. So my cycles, like I've said, they come in 5-7 days, 7-day high. I mean, the greed comes in, then I look for a 5-day pullback or a 3-day pullback and buy the dip. But it also depends on being in the now. I was really proud of this, of this, calling this out, because I spoke about this capitulation one day, and then I woke up that morning on CNBC and some guy was talking about capitulation in the indices, and I thought I nailed it pretty good, but who knows? Everything's in cycles, you know. If you pull up the 20-day, you've got cycles. And if you can catch that feeling, not the 20, that's yearly. 3-day sell-off, 3-day run, 3-day sell-off, 5-day consolidation, 3-day run, 5-day consolidation, 3-day sell-off, 5-day sell-off back to the triple bottom down here. Oh shit, can you imagine getting in that at 604 on a 20-day instead of buying it up here at 672 off the 200? The 200 is a pivot point area, an equilibrium on the 20-day 1-hour chart that I use as a support level. For example, if we broke a resistance of the 200 right here, I would call it all the way up to a triple top. If we couldn't break the resistance of the 200, I would call it down here at the bottom of the trend, or a triple bottom. Have it come back down and retest that, and then come back up and have the triple top break. But once we broke the 200 on the double bottom here, broke the 200, boom, all the way up to the triple top, and get out of the trade of the head and shoulders. That's a shoulder line. See how hard it was for it to break the shoulder? Because that's a head. There's only one thing out there that knows what a head is, and that's Budweiser. Budweiser and Target and Nike. Every time I want to drink a Bud Light, I think I'm sucking some guy's dick. I'll never drink a Bud Light ever again. So, I think that's about it. We're going to sum it up. We're constantly looking for the news. We want to pull up that yearly chart. Let's clear this up. It's getting too ugly in a way. Always want to pull up that yearly chart and look for a consistent level. Now I called this out down here, and I wrote a song back in September about this trade. We had a snake, double bottom, breakout, pull back, boom to the 200. And I wrote a song about this back in September, and I'm going to put it down at the bottom of the link if you want to listen to it. What else? Head and shoulders. See, there's your head. There's your shoulder right here. So that next day, when it found support, bam, pull back, boom, to the 200. Snake, breakout, pull back, boom, if you wanted to swing it for a long time. And we're at a double top, so we got to consolidate, pull back to the 9 on the SPX. So look at that yearly chart. Determine if it's bullish or bearish. When we were down here, I would have said this chart's very bullish. When everybody was talking bad about the market, I was saying, no, don't be. Things are cheap. I said that consistently back then, and these stocks are cheap. Now they're not. They're not cheap no more. But the momentum will carry us through to higher levels. We had a hell of a sell-off last year. You know, we had a hell of a sell-off last year to the 200 SMA. That's why I called this trade out in September, because we hit the weekly time frame of the 200 SMA using the moving average. That's all I needed. I didn't need nothing on this chart to know to take this trade at that time. Now, looking at the weekly, how do you determine if it's bullish still? One line can tell you that. One trend line. We're going to draw that trend line from here to there. Extend it out to the right. Now, see this, we broke out of the channel. Charting is very easy. It doesn't take much. It just takes one trend line to take a trade. So we've got the trend line here, and I'm sitting here looking at it, and I'm saying, Jim, what? We just pulled back to that trend line that was a resistance. Now it becomes support. So I would have took that trade off that trend line and run it on up. Now this is a 52-week high. We broke out of that 52-week high last week. Well, how'd you do that, Jim? Well, you go with the body of the candle right there, 42.79.30. That's where that body stopped at right there, and that's where that body stopped at. You see what I'm saying? You got a double top 52-week high breakout. If this thing pulls back to the 9 on this weekly time frame, that's going to be a very strong buy. Set an alert right there. You will guarantee it. You'll make a ton of money off that support level if we hit it. You'll make a ton of money. Why? Well, we had a triple top break here. Wick hit there, a wick hit there, and then boom. So it could definitely come back and hit that, and then bounce right back up, and then break and have the good run out of the 52-week high with a triple top break. But these are weekly candles, and for right now, we're bullish with that spinning top, and it's iffy. If this was a little bit thinner, I'd say we're definitely going to go pull back. A lot of people are very bullish right now, but I guarantee a lot of people didn't see this, and were still bearish at the time. See, they had 3 black crows right here that made that trade golden. If you recognize them patterns, the candlestick patterns, that's 3 black crows to the 200 SMA. That's a no-brainer right there to take that trade on that day. On that day. You got the snake, the breakout, the pullback, and then the boom. You got the double bottom here for a trade entry. Boom. Snake, breakout, pullback to double bottom into that. So yeah, we're definitely bullish in the market. Any kind of pullback is a buy right now. I think that's about it. Anybody have any questions there on YouTube? Or in the room? Hello, Isaiah. Do you have any questions on that strategy? So remember, do your homework. Pay attention to the news. Pull up that chart on the yearly. Wherever it is. It's in there somewhere. Look at the 3-week. Look at the yearly. Look for patterns. Study the patterns. Learn them by heart. So when you see one, you'll know it within seconds that you're seeing one. Learn how to trade a Darvas box. DARVASBOX. Learn the different kind of flags, the ascending, the descending, and the symmetrical. Learn candlestick patterns. Learn how to trade the map. Learn the candlestick patterns. Learn what a tweezer top is and a bottom. Tweezer bottom. See what I'm saying? Is a bull flag. Learn about inverted hammers. Learn about crows, soldiers, dojis, spinning tops. Learn them all. And if you want to get in at the lowest possible entry, or if you want to exit at the highest place you can exit. Be consistent with the volume. Price action trader. I'm always looking at the volume, looking at divergence when the volume shrinks and the price rises. And I think that's about it. Yeah, I'm going to call it a day. This has been recorded, I hope. Yeah. So I'm going to have it recorded, and we'll catch you all later. Retail traders, Sneaky Snake trading strategy.